Live from Bloomberg's World Headquarters in New York, I'm Shanali Bassick.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Kaylee, press your luck. One analyst says Bitcoin ETFs may actually be a double whammy for Coinbase, and it sees outflows and lower spot volumes both together.
In just a moment, we'll speak with analyst Vetle Lunde as we come off a month where we saw spot digital asset trading volumes hit a 19-month high of almost $1.4 trillion.
Plus, we're going to hear from the founder of Delta Blockchain Fund on how she views the early-stage investing environment right now.
So all of that is ahead, but first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. And what you will find is it is an update for most digital assets out there, including for Bitcoin, up about 1.8% right now, just north of $43,000. So really remaining in the trading range we've been in for about 2 months now. Since the beginning of December, we've been fluctuating between $40,000, $45,000, a little lower and a little higher on occasion, but right now, 43 is where we trade. Meantime, Ether is up by about 2.5%, a little bit of outperformance today. Coinbase, though, the, of course, largest publicly traded crypto exchange, is almost flat on the day, up just about 0.1% or so, trying but not largely succeeding to recover from the losses we saw yesterday, in which Coinbase dropped more than 9%, hit the lowest level since November, and that was after the analyst action that Shanali was mentioning. Mizuho's Dan Dolev writing, quote, "We estimate that outflows from ETFs for which Coinbase is the custodian exceed inflows for ETFs, for which Coinbase is the custodian, by about $1.1 billion. And that definitely has weighed on sentiment for that name, Shanali.
You're looking at the biggest names in crypto, the Bitcoin, the Coinbases of the world, but I'm looking at altcoins, Kaylee, because there was a lot of hype around DeFi earlier this year. You can see it here in Solana, just the meteoric rise it's had over the past 1 year period. However, more recently, in the last 24 hours, they had a 5-hour outage on the network, and it reminded a lot of investors of what happened back in 2023 when there was another series of outages on the network. You can see how much it's recovered, though, going from $14 and change to more than $120. And remember, more recently, since those highs, we have seen Solana drop about 20% or so since then. Now, the question becomes, what's the story for Solana moving forward? The block has recently reported that network addresses reached a record in the month of January. So what's the story for Solana and the altcoin ecosystem at large?
We'll get back to that story in just a minute, Shanali. First, though, we do want to break some headlines coming out of Federal Reserve Bank of Cleveland President Loretta Mester. She's currently speaking in Columbus, Ohio, and suggesting that she doesn't see a big rush to begin cutting interest rates. She says the Fed could gain confidence to cut, quote, later this year if the economy evolves as expected, but echoing what we've heard from Fed Chair Jerome Powell last Wednesday after the decision, as well as 60 Minutes over this past weekend, suggesting it would be a mistake to move rates down too soon or too quickly without sufficient evidence that inflation was on a sustainable and timely path back to 2%. As for the market reaction, none really to see. The 10-year, as it was before we got these headlines from Mester, down about 6 basis points, and the 2-year is as well. So let's go from the macro back to the crypto story and bring in now Vetle Lunde, his senior analyst at K33 Research. I guess, Vetle, to begin with, kind of a macro question. How much does the outlook for monetary policy, the prospect of the Fed cutting rates at some point this year, factor into the price action we are seeing in Bitcoin and other crypto assets?
So for now, the macro doesn't really factor in that much activity in Bitcoin price action. We have seen across the past few FOMC meetings that Bitcoin hasn't really reacted in any meaningful way to the FOMC. Neither has Bitcoin reacted in the same way as it did in 2022 to CPI releases. So for now, macro is not a very important market theme, whereas Bitcoin in itself has been more driven by unique traits to Bitcoin and also news surrounding Bitcoin, such as the ETF launch.
Well,
but this is due to...
Speaking of the ETF launch, you did not have Bitcoin prices really recover from the highs of this year. How can this cryptocurrency get a new narrative going into this year if the ETF just wasn't enough?
Yeah, that's so the ETF was initially enough to push prices from $30,000 up to the peak at almost $50,000 in January. So I would argue that ETFs have contributed quite hefty in pushing prices higher. Now a new narrative is needed. Macro definitely plays a role, but so does also the upcoming Bitcoin halving. you can make the case that the halving is a known event and something that the market anticipates, but it's still a huge reduction in daily supply issuance, amounting to 164,000 fewer bitcoins sold by miners each and every year. So if you contrast that to the current net US spot ETF inflow of 38,000 bitcoins since its launch, then it's still a hugely positive factor for the market. So we have both the halving.
How do you think about, for the ETFs themselves, there's a lot of questions around the Grayscale Bitcoin Trust conversion, the outflows that have been seen from people who are maybe looking to sell, but also specific actors. Think Gemini, for example, and the ability to sell. How much of an impact might that have in the near term?
It depends. So for now, the Genesis and Gemini motion seeks to convert GBTC shares and proceeds from that into Bitcoin to pay off creditors in kind. That should have a market net neutral impact, but the motion is not approved yet, and we don't know the details until February 8th. And still, even if it becomes approved, you would have this odd scenario where Gemini sells GBTC and purchases Bitcoin in the spot market immediately, but the GBTC flows are more visible than the spot market OTC purchases. So the market could have this psychological adverse reaction, pushing prices lower despite the net neutral effect of the flow. So such flows from Gemini and also from FTX's estate earlier on, and also from arbitrageurs realizing profit on GBTC they bought at a discount in 2023, has definitely contributed in Bitcoin's relatively poor performance since the ETF launch.
Well, and of course, we've been so focused on Bitcoin for the very reason that finally products actually backed by it are now trading as exchange-traded products here in the U.S. But I wonder what that means for everything else. Sonali was just running through Solana, but obviously there's other altcoins as well. Are we seeing a difference in volume in terms of the trading now of Bitcoin, since there is alternatives out there and there may not be alternatives for some of these other altcoins? Is that now that activity more exciting, perhaps?
Yeah, but that activity is also more exciting, but it's also like a theme of a rising tide lifting all the boats, where Bitcoin has experienced its tremendous rise, and then people go further beyond on the risk curve. Solana has a lot of interesting projects going for it at the moment, with also a lot of organic activity. Obviously, the outage today is not a positive development for Solana, and it's not the first time, but NFT activity and also DeFi activity on Solana is currently very high, and it suggests that Solana might become an Ethereum competitor, a long-lasting one. And whereas for Ethereum, you have some kind of similar narrative to what Bitcoin benefited from September, with the market anticipating a potential ETH ETF approval in May. But based on Bitcoin's price reaction to the ETF approval, I think that the market is currently more subdued in its expectations than it was in anticipation of Bitcoin's ETF approval.
How long do you think it would take for Solana to actually become a viable alternative to Ethereum?
Honestly, it's over the past half year, it's felt like Solana is getting there already. So the user base of Solana is thriving. So is all the DeFi activity. The issue is, of course, Solana being far more centralized and exposed to outages, such as the one we saw recently. So you have this trade-off where you either focus on decentralization and more network uptime, or you prioritize pace, which Solana has done. But that carries some consequences, evident by today's activity.
Vetle Lunde of K33 Research, thank you very much for your time. Now, coming up next, we're going to catch up with Delta Blockchain Fund's Kavita Gupta as the crypto market gears up for the 2024 election season.
Plus, MicroStrategy earnings are coming out after the market closed today. We'll discuss how its Bitcoin holdings are set to add billions to its balance sheet.
And to access all the latest data and news on crypto, check out CRYP Go on the Bloomberg terminal. Stick with us. This is Bloomberg.
Congress should pass legislation to provide for the regulation of stablecoins and of the spot market for crypto assets that are not securities. It's critical for there to be a federal regulatory floor that would apply to all states.
That was Treasury Secretary Janet Yellen on Capitol Hill. And we are joined now by Kavita Gupta, the founder and general partner of Delta Blockchain Fund. And if you listen to what the Treasury Secretary was saying, it has been a song that's been sung for many, many months, you could say years, in Washington, this idea of stablecoin regulation. What does it do or not do for the crypto industry at this point?
Sonali, thank you for having me. I think it does open up that there is a need for legislation. There is a need of regulations around it, and everybody is paying a notice. You know, back in 2013 or 17, when we saw the last big cycle, or 21, people were still, at least DC in 21 woke up and started paying attention to it. And then with FTX and Binance, there was a little negativity around there. But now, I do see a lot more senators really understanding the technological value and the financial free growth value behind these tokens and crypto, and how to use it as an alternative asset program for retail customers. So it's very exciting, actually.
Well, it's interesting because we talk so much about the Bitcoin ETFs, but the reality is a lot of conversation is also around the potential listing of Circle as well. And then you have more options for more retail investors to get into the crypto industry. When they're given a choice, are they going to choose things like stable coins that are more tied to the traditional financial system here? Or are they going to go further out on the curve and look at the altcoins and other parts of the DeFi ecosystem that are perhaps away from the traditional financial system?
It's a very good question because it really depends upon your risk, duration, return appetite. USDC is pegged to dollars. It is basically holding a currency which you need to pay globally as a stable coin. But when you look at Coinbase or you look at different mining IPO shares or SPAC shares, then there are people who are putting up a public equity portfolio, and I think Circle would be a great choice out there. But I do see that Ethereum, Solana, a lot of these layer ones and layer twos where DeFi, as you talked about, different yields, which we are talking about anywhere between 8% to 25%, exist, we are seeing more and more institutional approach to it, especially with people like BlackRock and other places, Goldman Sachs coming into the space, offering ETFs. You're going to need, how are you going to have basically a custody of it? And if you have custody, even Coinbase for custody of Ether and USDC provides yields on top of it. How do you maximize it? So we're going to see a lot of that run going. But of course, it depends upon different target audiences and their appetites.
Well, as we think about different audiences or even just different jurisdictions, different locations in which these companies could come to the public markets or just try to focus their efforts. I know you've joined us on this program before talking about how because of the lack of regulatory clarity, something we were just hearing the Treasury Secretary speak about, that a lot of activity was instead happening off the shores of the United States. Are you starting to see any change in that, or is that still the status quo because approval of spot ETFs aside, that regulatory uncertainty still remains?
Not yet, Kelly, because if you look at the crypto ecosystem or founders who are actually building on this, for them, the regulation is still not clear. I mean, 2009 to 2023, 24 is when we are seeing Bitcoin sort of getting legitimate and having a retail customer option in US. But if you look at these, Canada already had it for a long time. You see a lot of these, Abu Dhabi is now really going out and giving exchange licenses. You see the same thing in Lisbon and Singapore. I do feel like for crypto founders, US still lacks the clarity of regulation, plus a lot of support system. It seems very political. During the election year, things becomes different. After that, it becomes different. So a lot of founders are still doing offshore entities or moving to Europe or moving to UAE. But at the same time, I feel like a lot of family offices or a lot of public pension funds who wanted to hold Bitcoin for a long time, they have good alternative increasing the liquidity in the market.
Well, and that brings me to the wider question, and obviously I asked this from sitting here in Washington where I'm covering the 2024 election cycle. How are you talking to founders about how policy, the outlook for policy potentially could change depending on not just who is in the White House after November, but also who controls the House and Senate?
Yeah, it's been a very fascinating year because last 4 years back when the same election happened, there was no clarity whether Republicans or Democrats are very crypto friendly or are basically looking at it. Now you do see Biden administration in last 4 years. Yes, you do have Bitcoin ETFs, but there has also been a SEC chairman who has not been very friendly and who always said move with cautious, and other senators out there. At the same time, you have President Trump who did his own NFT, but also not very excited about supporting CBDCs. He did make a statement that he is not going to support CBDCs for US dollars. So it's a very fascinating time, but also at the same time, we are seeing a big lobby group, like a legitimate blockchain crypto lobbying group, funding senators in a very transparent manner and trying to move more and more regulations around it. So I do feel like that now there is a proper structured lobby. So irrespective who comes, there will be a very big ask from their donors about a clarity of these regulations.
Kavita, before we let you go, we were talking earlier in the show about the Solana outage and the pressure on price we've seen after a meteoric rise, really, of the token. How do you see the story playing out for Solana after it's hit a second significant set of outages in the last year?
I think with Solana, a technology which you are trying to move forward with a lot of efficiency and very low gas fee, of course, there is going to be a problem when you need to shut it down and maintain it or take care of some issues. I am a big Ethereum fan. That's where I started my journey. But I do like DeFi products on Solana just for the gas cost optimization and the speed of it. I do think that the Solana prices, one of the biggest reasons for Solana prices to go down to 16 was Solana vaguely being named as probable security by the SEC's documents against Coinbase. And I think that took a lot of confidence away based on regulations, not from technology, because if we look at the TVL, it didn't move that much. So I do feel like it will come back and it will continue to provide a very good alternative for DeFi and NFT platform. Said that, I think in alternatives, I would say Optimism, Polygon, a lot of layer twos who are going into ZK side are going to be a big competitor for Solana now, which did not exist in a big way in last couple of years.
All right, Kavita, we got to leave it there, but great to have you back on the show. Thank you so much for joining us. Kavita Gupta, founder and general partner of Delta Blockchain Fund. And still coming up, MicroStrategy earnings are due after the bell, with investors awaiting the impact of a new accounting rule and how it will hit or help the business. We'll have more next. This is Bloomberg. This is Bloomberg Crypto. I'm Kaylee Lyons in Washington with Sonali Basak in New York. We'll get MicroStrategy earnings after the bell today. It became the first public company to buy Bitcoin as a capital allocation strategy back in 2020. And now the business is on the verge of a windfall from a new accounting rule change that requires valuing digital assets at market prices. So let's discuss this now with Bloomberg's Olga Karev, who is joining us. So Olga, how will these accounting rule changes impact MicroStrategy specifically? What are we expecting to see?
Sure. So in the past, MicroStrategy has had to write down the value of its Bitcoin holdings. And so it had massive impairment charges during the last 2 years or so. One of the impairment charges was almost $1 billion. But with this accounting rule, what it does is it allows the company to essentially mark the price of the Bitcoin that it's holding up or down, depending on the market price. And so if we look at the situation today, last year, Bitcoin's price has more than doubled. And so during the fourth quarter, the company also purchased some Bitcoin. And so what we might see is the value of the Bitcoin on its balance sheet increasing by something like $6 billion because of this accounting change. The big question is, of course, if the company will decide to adopt this accounting change now or later. But obviously in the next year or so, this will happen.
How do you think about the use of MicroStrategy as a trading strategy for investors? On one hand, this was a proxy into buying into the Bitcoin ecosystem, and now there's the ETF for spot Bitcoin. How has that advent of the spot Bitcoin ETF impacted MicroStrategy?
It's been a huge impact. MicroStrategy stock is down something like 20% so far this year. And I think it's exactly what you said. In the past, investors didn't have a lot of options for, if you don't want to invest into Bitcoin directly, you could buy MicroStrategy shares and use them as a Bitcoin proxy. And so MicroStrategy commanded a pretty hefty premium over Bitcoin's price because of that. But now there are other options, spot Bitcoin ETFs from well-known providers like BlackRock and Fidelity. And so the premium that MicroStrategy shares used to command has decreased in about half.
Bloomberg News' Olga Karif, thank you so much. We'll be watching for those earnings after the bell. Kaylee, I've been looking at Bitcoin prices, for example. We were talking about that ETF, the impact that it was supposed to have. And by the way, even though you saw a surge in the fourth quarter that could help out a firm like MicroStrategy and its results, listen, you only have a less than $700 rise in Bitcoin since the end of last year. Of course, it's fluctuated since then, but 700 isn't a whole lot. And the question is, how much more can Bitcoin investors squeeze out of these publicly traded stocks? What's the story?
Yeah, what's going to be the next catalyst if spot ETF approval did not, in fact, prove to be that, Sonali, I think is the question. As we were talking about at the top of the show, we've seen Bitcoin getting stuck in ranges really for the last year plus now. Of course, the range we're in now in this $40,000 to $45,000 is higher than we were a year ago. Absolutely, no question about that. And a lot of that was the optimism about ETFs actually getting approved. But what would get us to the next higher range? That's a question we're going to have to keep exploring on this show.
There's a question that the halving might be that moment, but there's an argument to be made that maybe that has already been priced in too.
Yeah, and of course, there's still regulatory considerations to factor in here, and we're going to have more on that on the program next week. Kristen Smith of the Blockchain Association will be joining us, so make sure to tune in next Tuesday at 12 p.m. Eastern Time. For Sonali Basak and myself, Kaylee Lyons, thank you for joining us. This is Bloomberg.